Innovating for Insurance, S&P 500 Duo Swift Index. In uncertain markets, tools that dynamically adjust to volatility may be essential for investors seeking to try to limit the impact of unexpected dips. S&P Dow Jones Indices, a leading provider of market indices for use in insurance products, created the S&P 500 Duo Swift Index to serve as a foundation for these tools. The S&P 500 Duo Swift is a diverse, multi-asset, rapid-response, risk-controlled index designed to measure exposure to the S&P 500 while seeking to control volatility. Through its dynamic mix of E-mini S&P 500 futures, long and short 10-year U.S. Treasury futures, and its intraday volatility rebalancing methodology, the index is designed to measure the performance of a controlled volatility version of the S&P 500. So how does the index work? The S&P 500 Duo Swift's intraday rebalance methodology is computed during 7 different time windows in the day. Specifically, the index targets an index volatility of 12.5%. While 12.5% may be considered higher than some more traditional risk control indices, S&P 500 Duo Swift's target volatility level may allow the index to still participate in potential upside that follow temporary upticks in volatility by not forcing an exaggerated move away from equities. When volatility drops to certain levels, the index increases its exposure to the S&P 500 and potentially bonds, up to a maximum potential allocation of 175% for each asset. S&P 500 Duo Swift's momentum-based fixed income allocation also may help the index adapt to changing rate environments, which may help to preserve yield and improve stability. When interest rates go down and Treasury prices go up beyond certain levels, the index incorporates a long position in Treasuries. When interest rates go up and Treasury prices drop beyond certain levels, the index pivots to a short position on Treasuries to help protect on the downside. So what's the end result? An index that provides multi-asset diversification, responsive volatility control, potential for downside protection in a rising interest rate environment, and potential for higher equity exposure than more traditional risk control indices, all while historically providing similar performance to the S&P 500 based on back-tested data. To learn more about the S&P 500 Duo Swift Index, visit us at the link below.